Welcome back, traders. You've seen how single candlesticks reveal shifts in strength and market behavior. Now we build on that with patterns that use two candles to tell a clearer story. In this lesson, we explore engulfing patterns, moments when one candle completely overtakes the previous one, signaling a possible change in momentum. You'll learn how bullish and bearish engulfing setups form, what they indicate, and how they can help you recognize potential reversals with more confidence. Let's get started. A bullish engulfing pattern is a powerful two-candle reversal signal that often appears at the end of a downtrend. It forms when buyers step in with enough strength to completely overtake the previous bearish candle. This shift shows momentum moving from sellers to buyers, and it's one of the clearest signs that a potential upward trend may be developing. You're looking at a bullish engulfing pattern. It begins with a small red bearish candle, showing sellers still in control. But the next candle tells a different story. A larger green bullish candle forms and completely engulfs the body of the red candle. This shift shows buyers stepping in with enough force to overpower the prior selling pressure, often signaling the start of a potential reversal. This pattern typically forms over 2 consecutive time periods, no matter what chart you're viewing, daily, hourly, or any other time frame. What really matters is the relationship between the candles. The second candle must fully cover the first, showing a clear shift in momentum as buyers overpower previous selling pressure. When that full body engulfing occurs, the pattern becomes a strong sign of a potential reversal. Here's what's unfolding. Sellers start off in control, pressing prices lower and continuing the downtrend. Then, strong buying momentum steps in, reversing the move and lifting price above the prior session's open. This decisive shift from seller pressure to buyer strength is what makes the bullish engulfing such a reliable sign of a possible upward reversal. Let's visualize it. The stock's price has been sliding. On day one, it opens at $50 and closes at $48, showing sellers in control. But on day two, it opens even lower at $47, then rallies throughout the session and closes strong at $51. This larger bullish candle completely engulfs the first one, signaling that buyers have taken over and the downtrend may be coming to an end. When traders spot a bullish engulfing pattern, they typically wait for the next candle to close higher. That higher close confirms that buyers are still in control and that the reversal has real strength behind it. Once confirmed, traders look for a buy entry, using the shift in momentum as evidence that the downtrend is weakening and a potential upward move is beginning. Trading exercise. You spot a bullish engulfing pattern on the chart. Day one closes at $48 and day two closes at $51, fully engulfing the previous candle. Your task is to take these steps and place them in the correct order to form a smart trading decision. You have 10 seconds to record your answer. Pause the video if you need more time. Let's walk through this together. Here's the correct sequence for managing a bullish engulfing setup. Step 1. Wait for a close above $51 to confirm the reversal. Step 2. Enter a buy trade once that confirmation is in place. Step 3. Place a stop loss below the low of day 2 to protect your position. Step 4. Set a take profit and monitor the trade as price moves in your favor. Now that you've learned how to recognize when buyers are stepping in, let's flip the chart. It's time to look at the other side of the market and see how a bearish engulfing pattern can signal when sellers may be ready to take control. A bearish engulfing pattern shows 3 key things. First, it forms after an uptrend. Second, the day 2 candle completely engulfs day 1. And third, it signals a potential bearish reversal. When you're looking at a bearish engulfing pattern, here's what matters. You'll see a small green candle, followed by a larger red candle that completely engulfs it. That engulfing move signals strong selling pressure and a shift toward bearish sentiment. Here's how it plays out. Buyers are in control at first, steadily pushing prices higher. Then sellers step in with force, driving the price back down and closing below the previous session's open. That strong shift signals a potential bearish reversal. Consider a chart in an uptrend with the following candlesticks. Day 1 opens at $100, Day 2 opens at $103, and closes at $99, creating a bearish candle that engulfs the previous day's body. This pattern suggests that sellers have taken control and may be reversing the prior uptrend. Just like the bullish engulfing, traders usually wait for confirmation before acting. If the next candle closes lower, it confirms that sellers are in control. Once that confirmation shows up, many traders consider entering a short trade. What's your next move? You spot a bearish engulfing pattern after a strong uptrend. A. Ignore the pattern. It's not a strong signal. B. Wait for the next candle to close lower. Then consider entering a short trade. C. Immediately buy, expecting the uptrend to continue. Is it A, B, or C? You have 10 seconds to record your answer. Let's take a look at the correct answer. The best move here is B. Wait for the next candle to close lower, then consider entering a short trade. That lower close gives you confirmation that sellers are taking control before you act. Just like the bullish engulfing, traders usually wait for confirmation before acting. If the next candle closes lower, it confirms that sellers are in control. Once that confirmation shows up, many traders consider entering a short trade. Let's put everything into context. Not all bullish or bearish engulfing patterns carry the same weight. Stronger signals usually have a larger second candle that fully engulfs the first, a clear extended trend before the pattern, and elevated trading volume during the engulfing move. These details help you decide whether the pattern is worth acting on, or if it's better to wait. You've now mastered engulfing patterns and can recognize when buyers or sellers are taking control. You're ready to apply this skill in real trading situations with confidence. Next, we'll explore another key pattern to sharpen your trading strategy even further. Congratulations! You've completed Day 13, Lesson 4. Solid work. Your skill set is leveling up. Next up, doji patterns. Keep growing and keep building the mindset of a confident trader, one lesson at a time.